The controversial Platform Creators Alliance, whose operations have now collapsed, has been revealed as a sophisticated Ponzi scheme, defrauding thousands of investors across the Caribbean, including St. Lucia, St. Vincent, Grenada, Dominica, the Bahamas, and Puerto Rico. CA's website domain, carils.com, was privately registered in 2017 and last updated in October 2024, with hidden ownership details. A deeper look into its source code revealed Chinese language elements, suggesting possible ties to China. The company had no real products or services, instead requiring affiliates to recruit others while performing meaningless tasks like clicking a button to simulate legitimacy. Investors were promised high returns for watching videos and completing tasks, but the operation was merely recycling new investment to pay earlier participants a textbook Ponzi scheme. Red flags emerged in late March when withdrawals were delayed under the guise of tax filings, with excuses stretching into April. Despite these issues, CA aggressively prompted new investment tiers 1999, 3999, 6999, and 9999 USDT, even encouraging users to merge family accounts, a stark reversal from earlier rules. Unbeknownst to investors, the UK's Companies House had filed for CA's compulsory strike-off on March 24, 2025, signaling its impending dissolution. On April 2, 2025, CA administrators vanished, deleting WhatsApp groups, freezing withdrawals, and cutting all communication. Investors, many of whom took out loans to fund their investments, were left with nothing. Losses range from $10,797.30 to $26,997.30, depending on the package.
And if it seems too good to be true, one should be very reluctant to get involved.
Today, a supposed press release claimed CA was merely transitioning to a new system, but with the last official group shutting down at 12 p.m., no one believes the lies anymore. Lindell Senville, operator of DataShore, has urged St. Lucia's financial investigative agencies to take action.
I think the troubling thing is, even though this scheme was being delivered via what might be a slick, front end, a slick app, it doesn't take away from the fact that it's a scheme. And our financial investigative agencies ought to be taking lead in terms of pursuing those behind it, because that's not what you might call a legal activity. And what I'd like for persons, generally speaking, to bear in mind is when you're being invited to take part in something which clearly doesn't have a tangible product or service that creates true value, then you have to be questioning whether it's something you want to get involved with. And it might be unfortunate to say this to those who are already taken in by this scheme, but a little bit of common sense goes a long way. And if it seems too good to be true, one should be very reluctant to get involved.
However, for thousands of victims, the damage is already done. Another harsh lesson in the dangers of too good to be true investment opportunities. This scheme mirrors past failed Ponzi's like AI robots, Gucci VIP, and Car USDT, proving that when an app's only function is clicking buttons, it's likely a scam. Shane Stephen, NBC Prime.